stage of a financial bubble isn't the collapse. It's the moment when doubt quietly disappears. That moment arrives when prices keep rising, confidence feels justified, and skepticism starts to sound outdated, not reckless, just out of touch. By the time the word bubble becomes part of everyday conversation, the damage has already been done. Not because of fraud or conspiracies, but because the human mind convinces itself that this time is different. Welcome to The Financial Historian, where money, power, and history collide, and nothing is ever as simple as it appears. Every major financial bubble shares one strange trait. While it's forming, it rarely feels irrational. It feels reasonable, even responsible. People don't believe they re-speculating. They believe they re-adapting to a new reality. That's why bubbles are so hard to recognize from the inside. They don't present themselves as excess. They present themselves as progress. This pattern isn't modern, it's ancient. Long before stock markets existed, people were swept into speculative manias around assets that seemed to promise a completely new future. In 17th century Holland, tulips symbolized status and scarcity. In the 19th century, railroads represented national ambition. In the 1920s, radio stocks felt like the future speaking. And in the 1990s, the internet didn't feel like technology. It felt like the end of distance itself. Each of these innovations was real. That matters. Bubbles aren't built on lies. They're built on truth, stretched beyond its limits. At the center of this process is psychology, and it begins with stories. People don't understand the world through spreadsheets. They understand it through narratives. Stories explain cause and effect, reduce uncertainty, and create meaning. And once a powerful story takes hold, belief starts driving the numbers. Valuation becomes an afterthought. Traditional metrics are dismissed. Profitability is postponed. Losses are reframed as investments in future dominance. When a story feels strong enough, math becomes inconvenient. This is where social proof takes over. If everyone else is buying feels safer. Rising prices become proof. Skepticism becomes expensive. Analysts who question valuations are labeled pessimists. Investors who stay cautious feel left behind. From the inside, consensus doesn't feel like herd behavior. It feels like confirmation. Over time, confirmation bias hardens belief. Positive signals are amplified. Negative data is explained away. Language softens. Risk feels distant. Then comes quiet overconfidence. Early gains feel personal. Success is credited to skill rather than conditions. Everyone believes they'll exit before the downturn, even though history shows almost no one does. Luck feels exactly like intelligence, until it doesn't. When major institutions validate the narrative, doubt collapses completely. Banks publish bullish reports. Governments praise innovation. Capital flows freely. At that point, the asset no longer feels speculative. It feels endorsed. And none of this feels reckless while it's happening. It feels aligned. It feels inevitable. That's why bubbles are rarely recognized in real time. They don't feel like madness. They feel like reality finally making sense. But consensus has a blind spot. It can't see the assumption holding everything together. Which brings us to today. Many investors are asking whether we're seeing the early stages of an artificial intelligence bubble. Not because AI is fake, it isn't ET, but because expectations are growing faster than near-term economics can justify. The technology is real. The productivity gains are real. But markets don't price distant inevitability. They price short-term belief. A small group of AI companies has driven a disproportionate share of market gains. Valuations rise on assumed dominance. Profitability is pushed into the future. Skepticism isn't debated, it's dismissed. The question stops being, what is this worth, and becomes, what if I miss it? That shift defines the late stage of belief. Bubbles don't burst because everyone suddenly realizes they were wrong. They burst because one assumption breaks. When that happens, confidence doesn't fade, it snaps. So how do you protect yourself? Not by predicting crashes. Timing bubbles is nearly impossible. The real goal is awareness. The most important question isn't, is this a bubble? It's what belief am I relying on? Because history doesn't repeat due to changing assets. It repeats because human psychology doesn't. And the people who survive bubbles aren't the ones who predicted the future. They were the ones who understood their own assumptions. If this gave you a new perspective, subscribe. History holds the answers, and I'll show you where to find them.